Hey y'all, Zach McDonald, your real estate agent with Real Property Associates, and today I want to share with you 6 financial benefits of owning a home. When I think about investing and building wealth and financial freedom, those types of things, I think about, and many of you probably think about, an emergency fund, getting that rainy day fund set up. But for me, after I've got that rainy day fund set up, for me the next step is purchasing a home. And we can talk about, I think there's also investing in the stock market and also your retirement accounts, right? So you've got those 2 different buckets and they have different protections and benefits and drawbacks. But for me, if we've got 4 quadrants, I think buying a house and owning a home, buying real estate is number 2 on our 4 quadrant type of setup. So as I'm looking at owning a home and what the benefits are, I think there are 6 main benefits of owning a home. The first financial benefit to owning a home is that it's essentially a forced savings account. Every month, even if your house is not appreciating in value at all, you are paying money into it every month and you're paying down the principal value of your loan, unless you paid cash, right? Then it's not a forced savings account, right? It's not if you did it that way, but you are able to slowly pay down that principal balance, and over time, you are building that up. So if you were to sell it, your equity is higher. Now, of course, we're always hoping that our house is going up in value, and that's another part of owning a house that we'll talk about. But that forced savings account is a huge piece of building financial freedom. And for many, their home is a huge, huge part of their financial picture as they start to head towards retirement. Number 2 on our list is the IRS Tax Refund. So if you're a homeowner, there are opportunities for you to reduce your income and write certain things off. And I don't want to get into too many specifics here because I'm not an accountant and everybody's situation applies a little bit differently. But as a homeowner, there are certain things like your mortgage interest as a primary house that you get to deduct from your income. So again, these are just little things that start to add up, right? You've got the forced savings account, those IRS tax refunds, but then you've got the tax advantage nature of real estate. As a homeowner living in your primary residence, you have this opportunity to take advantage of a very cool tax advantage status, and that is as a primary residence, if you're living in your house 2 out of the last 5 years, if you're single, you have up to $250,000 capital gains exemption on the increase in value in your home. So if you were to sell, let's say you sold your house for $500,000 and you bought it for $250,000, right? There's an opportunity to take advantage of up to that whole entire amount tax-free, right? That's amazing. And there's lots of nuances to it, right? What gets counted if you can increase your basis by including projects that you've done to the house. Again, I don't want to get too far into the nitty-gritty in this video. It's not really the purpose, but as a homeowner, you have that opportunity. And if you're married and filing together, it's up to $500,000, right? So my wife and I, we have a house that has more equity in it than that $500,000 mark. So we're most likely, when we sell that house, going to need to pay a little capital gains, but we'll have a large chunk of that money that we'll be able to just take out without any tax burden, which is a giant benefit, right? That's huge. And it allows us then to put that into our next primary residence. And if you do that a few times, it's pretty sweet, right? You start to see that compounding. It's like, okay, well, we built up a lot of equity and we sell our house and we don't pay any taxes on that. And then we do it again. And then 5 years later, we do it again. It's like, whoa, that's pretty substantial, right? And that's money that's just coming to us. If you're an investor, there are other opportunities. The big one's the 1031 exchange. And that's where you're able to essentially roll over the money from one investment to the next and defer taxes. So it's not tax exempt, or you're not getting any kind of like free lunch, but you're able to take it for the moment and roll it into the next investment and defer those tax payments. So that's another strategy for an investor. But in either case, there are opportunities to take advantage of some, they're not loopholes because they're programs that are incentivizing investing in real estate and buying primary real estate. The 4th benefit here of owning a home on our list is the home appreciation piece. So we've already talked about a few key benefits, but that home appreciation, that's more subjective, right? We don't know how much your house is going to appreciate. If you've bought a house in the last few years here in the Seattle area, you've been blown away with how much appreciation you've had. And you might even be able to sell your house and still have to pay capital gains, even if it's your primary residence, just because you've made so much equity out of your home sale. But I think home appreciation is one of those variable things, but it is a real aspect of owning real estate. So not only do you have this forced savings account where you're building up equity that way, but you're also able to build up equity as your house appreciates. So my house currently has more equity in it on paper than what I actually paid for it, right? So it's pretty remarkable how that all works. And the fifth benefit is that it's a leveraged investment. Real estate is and can be a leveraged investment. Now, again, if you're paying cash, which statistically in King and Snohomish counties, we're looking at between 12 and 14 to 15% of transactions. In those cases, it's not leveraged, right? It's just, hey, I own this, but I'm still getting the benefit of the appreciation and the tax advantage status, and maybe even the last one, which we'll talk about. I don't want to spoil it yet. But the leveraged investment piece is, in my example, personally, 10% down, right? So our house we bought for $500,000, a little over $500,000. We put like $55,000 down. I can't remember the exact numbers at this point, but that money now is $600,000+ in equity, right? So yeah, we put a little bit into fixing up the house. Like in our situation, we had to put a new roof on and things like that. And other people don't have to do anything to their houses, right? New construction or townhouses, sometimes you do hardly anything to your house. So there's not actually any other costs. But in our case, we bought an older house and we've had to do some fixes and improvements. And we've actually improved the value of the house as well by doing those things. But that $50,000, and the seller even paid our closing costs, which is amazing, has become a substantial amount of money. So we could have put more money down, and if we did, it would have been less leveraged, so there would have been less of a percentage jump, right? But the more leveraged, the bigger that gap is, and so the greater the return on that investment that we put in. And again, we're getting those forced savings account, the IRS tax refunds, that tax advantage status if we do decide to sell, the appreciation, but that leverage is kind of where you start to see a little bit more of the financial benefit in real estate, at least from my experience in my situation, right? It's just compounding at a greater rate, that initial investment. Now, again, you don't need to buy real estate as a leveraged investment. Some people don't, but it is one of those investments, and in my opinion, the only one that really makes sense because you're able to, you need to have a place to live anyway, right? It's not a speculative investment that you're not, it's really your house, right? If you live in it. And rental properties, again, you're able to cash flow, which is our sixth one, but you're able to like make money, right? Somebody's paying you that. So as long as you can have a tenant, you're able to pay that mortgage, it's safe. I don't like the idea of buying stocks and investing that way on margin or with loans, but in this case of real estate, whether you're investing or you're buying it as your primary residence, I think there's some pretty good arguments for why that's not a bad idea. And the sixth benefit, I already spoiled it a little bit, cash flow. If you are an investor, you are likely looking for not only paying down the value of the home, but right, having the tenant pay down the mortgage and not the home appreciation, but you're also wanting to see some cash flow as well. So the real benefits of being an investor, you're getting those, there's tax write-offs and tax advantage status. I mean, these all apply, right, to investors and the primary residence, but you're seeing the value and the growth in the forced savings account, right, paying down of the debt. You're seeing the home appreciation all at the same time. And then if somebody's also paying you money on top of all that every month and you're getting cash flow, that's amazing. You can also do the same thing with your primary residence. So in my case, we are renting out our basement. So we live in the house, we have all these benefits, but we also are cash flowing, right? Every month, somebody's paying us and writing us a check. It's amazing, and it pays almost half our mortgage. So I think you can do this with Airbnb, you can do this renting out a bedroom or a couch, you can have an additional dwelling unit, ADU, a DADU, detached unit at the house. And in some cases, you can even buy 1 to 4 unit or 2 to 4 unit multifamily property, right? And still live in it and treat it just like it's your primary residence, but have this additional cash flow on top of it. So in real estate, there's just so many creative ways to make all of this happen. And again, the purpose of this video isn't really to dive into how to do all of it, but really to just share with you some of the primary reasons and benefits that there are financially of owning a home. So we've got the forced savings account, we've got the IRS tax refunds, we've got the tax advantage status, we've got the home appreciation, we've got the leveraged investment, and we've also got the cash flow. And if we put all that together, I think it makes real estate look like a really good way to invest your money. And historically speaking, real estate, the stock market, and owning a business are really the big ways that people are able to make and accumulate wealth in the long run. So the key here is just investing, right? You have your job, you're making money, but you also want to be putting your money to work and investing the resources that you have so that they can grow and compound over time. And I think real estate is one of the key ways to continue to work towards and build financial freedom and wealth. Thanks so much for tuning into our video as we talk about 6 of the financial benefits of owning real estate. And if you made it all the way to the end of this video, I hope that it was super valuable for you. If you want to see more videos like this one or learn and stay in the know about the Seattle housing market, please subscribe to my channel. And if you want to talk more about this with me offline, feel free to reach out. I'm happy to be a resource for you.